dive in on what we're going to be discussing today. Obviously, we've had the CPI data already out. We're going to discuss what happened there. We're going to have a little look later in the webinar on how the market performed through that data. We're going to discuss some of the economic indicators, commitment of trade reports as well. Really like using commitment of trade reports, and they can help us kind of give us a little bit of guidance as well with the future monetary policy as well, because commitment of trade reports highlight where sort of commercials and non-commercials are positioned within the markets, and they have to really be ahead in terms of fundamental analysis as well. So they do a lot of the work for us. So that's something that we're going to be taking a look at. Going to have a little look at the seasonal analysis as well, and then we're going to have a little look at some volume profile analysis. And volume profile is something I really like to use when looking for those kind of hidden levels within the markets. So let's have a look at what data has been released recently and sort of what we need to really take note of. There's not been a huge amount of data out of Canada this month so far. We do have GDP data coming up shortly as well towards the end of the month, which we will take note of. But what was really interesting at the start of the month, it was the employment change in Canada. So we had a really surprising move on the employment change. We actually saw jobs come in at 90.4K for the month of April, which was a sharp increase from minus 2.2K the month prior. And estimates were around about the 20.9K, but that wasn't to be the case. We actually, like I said, surprised with an upside miss there. The unemployment rate also stayed at 6.1%. So the narrative was that we were going to see a slight growth in jobs, but we were going to see an increase in the unemployment rate. That wasn't what we had this time. We actually had a really surprising number in the month of April, and that really overshadowed that sort of higher unemployment rate that we have seen in Canada. Now, we had CPI data out today. Month on month fell to 0.5% from 0.6% as expected. And then we had the median CPI, which came in at 2.6. So that's the year-on-year CPI. Now, obviously, the Bank of Canada would like to see inflation rates lower than this. They would like to see it more towards that 2% target, like most other central banks. But we've seen a sort of slight decrease, but it's still higher than that 2% target. So I still feel that the Bank of Canada are going to leave those rates a little bit higher for longer, especially because of this employment data as well. You know, a hotter labour market can obviously lead to more consumer spending, which can obviously add pressures in inflation rates. So that's what's going to be concerning for the Bank of Canada right now. That surprise number there. Whether we get revisions on that next month, we'll have to wait and see. A revision lower could help the Canadian dollar's weakness that we've recently seen. But at the moment, CAD's fairly strong, so we'll have a little look at that as well later in the webinar. Let me know in the chat though. Do you take a look at the sort of employment change in the market? I'd like to know your thoughts. We obviously had Bank of Canada Governor Macklem speaking as well. We've got some more speeches coming up shortly, but we're going to talk about the correlation as well between oil and CAD shortly as well. So hopefully you will find that interesting. But here we have the inflation rate. And there's usually sort of three things that a central bank will keep track of. That is the inflation rate, the growth, GDP essentially, and the employment rate. And we can see here, obviously, we had a very large spike in inflation globally that was felt across the world, and it came near that sort of 8% level. And now we've seen a nice decrease in that. We've seen the market almost trend lower in terms of the inflation rate. Now, we could sort of see it being a little bit sticky at the moment. We are kind of in that sort of range between that sort of 2.6% and 4%. The difference between this and what we've seen in the US dollar recently is the US dollar's inflation rate looks a little bit more sort of range bound, kind of moving towards the highs. and lows, whereas we've still got that kind of average decline in the inflation rate in Canada. But where do they want it to be? They want it to be near this 2% level where we saw back in 2020. So that's what they want to see. The rate of kind of getting inflation down to that point is leaving those interest rates higher for longer. So that's what they want to do. They want to see that continuation of that downside pressure on inflation. And we also have to look at how that kind of could affect the Canadian dollar and especially dollar CAD prices, because if they leave rates higher for longer, that could increase the CAD and in turn make costs a little bit higher, which will then again have a knock-on on consumer spending. Going on to the unemployment rate. So like I said, we've had that sort of shock unemployment rate or shock sort of employment change, which really overshadowed this higher unemployment rate. The unemployment rate at 6.1% is the highest it's been in 2 years. So that would usually have a negative impact on the Canadian dollar. But obviously, we're not really seeing that impact right now. Dollar CAD prices moving low at the moment towards that 136 handle, which we'll go have a look at in a little bit. But essentially, this was overshadowed by stronger jobs. And the higher unemployment rate at the moment is mainly driven by younger people at this current moment in time, and those in sort of heading into retirement age as well in Canada. So really speaking, the core growth that we saw, so when net employment moved up to 90.4K was mainly due to the sort of middle ages in the economy in Canada as well. So those that are usually spending more, essentially we saw a bigger job growth there. Hi, Vincent. Nice to see you again as well. Welcome to the webinar. Does anyone have any questions so far? We all good? Let me know. Let me know in the chat. Let's have a sip of tea. It's 5 o'clock after all. We're in that after work period, essentially. I believe we're all good. I'll move on to the next one. Gross domestic product, so GDP in Canada, actually expanded to 0.2% in the fourth quarter of 2023, largely due to the sale of crude oil. And this is where we're going to lead on to our correlation between CAD and crude. But this was largely driven by that, and imports also declined by 0.4%. So we're seeing a little bit of growth there for Canada. Now, obviously, crude oil prices recently have come in lower, so that could have a knock-on effect of GDP in the future. So whether we'll see that sort of rebound that we saw recently due to the sales of crude come in lower because the price is not as high, so they're not selling it for higher prices. And that brings me on to this correlation with crude. You can really see what we have here. So we've got the blue line, which is crude oil prices, and we've got dollar CAD, which is the green line here. And we can see how close the correlation is between the two assets. So recently, you can see that crude oil kind of peaked towards the middle or start of October, I should say, of 2023. And we saw quite a significant drop in the price of crude. And you can see actually dollar CAD, it took a couple of months to kind of filter through to dollar CAD. But once it did, it had a really good impact or good correlation between the two assets, and dollar CAD kind of proceeded to fall. So really speaking, is crude oil the lead indicator for the price of dollar CAD? I think so. So if we take a look at it in a little bit more detail, if I just highlight where that kind of top was in in crude oil, you can see a couple of months later, dollar CAD followed that price. We saw a bottom form in crude oil here, and look, it took a couple of months again, but then dollar CAD started to follow that price. Again, we've recently had a top in crude oil, and then a couple of months or even a month or so later, dollar CAD has started to follow that price. So I think it's really, really important to identify correlations within the market, and this is a very, very strong correlation. So what does this really tell us? Does this tell us that the dollar CAD price, which is currently around that 136 handle, if I just draw a sort of line back here, just sitting below that sort of 136.50, around 136, is that actually going to be the point of where we see that stop? Or because crude oil prices are continuing to trade lower, and especially because we're below that sort of $80 level, are we actually going to see a big move to the downside here with potentials coming down towards $72? You know, will that then drag dollar CAD prices with it as well? I think that's something that we need to really keep note of in the near future. Crude oil prices today have started to continue to push lower. This is an up-to-date chart. And obviously we've had the CPI data, which kind of actually elevated dollar CAD prices higher for a short period of time. So we'll see if that can continue or provide opportunities to the downside, because the way I see this is if crude oil is going to be that lead indicator and it's pushing prices lower, you know, any kind of rallies could be opportunities to sell, in my opinion. So let's move on to some seasonal analysis then. So seasonal analysis here, a little bit sort of on the opposite side to what we're talking about really at the moment. You know, I think what we've seen so far would more promote the idea that the dollar CAD prices could continue to move lower, whereas the seasonal analysis actually suggests that the market may move higher. Now, this seasonal trend of dollar CAD is over a 10-year period, and this is provided by Seasonax. But what I've done is I've highlighted between June and December. And the reason why I've done that is because you can see there's usually a strong upward trend that forms between those times within the year. Now, I always say with seasonal analysis, you do have to take seasonal analysis with a pinch of salt. It is an average over a long period of time, and it doesn't give you sort of how far price is going to move, essentially. You only see the potential, because that looks like obviously a large upward trend would form in the market, but that's not always the case. You know, you could just see a couple hundred pips of price movement, and that's the seasonal play for the month. So I do say you have to take seasonality as a sort of sentiment confluence, not necessarily something that would go into my analysis of, okay, there's definite seasonals going on here, I'm definitely going to go and short that market or buy that market because of seasonals. It works a little bit better with your commodities, essentially. But what it does give us, like I said, it gives us that little bit of framing of where the market has been on an average over a period of time, especially if we look at it in terms of where are those lows and highs formed within that period. And we do tend to see a low form in the sort of middle of June and also the start of July. So what it tells me that dollar CAD could sort of remain fairly range bound between June and July. And then August is where we usually see a kickoff in dollar CAD higher prices. Now, we do have a presidential election year this year in the US, and that can also have its own seasonal pattern. And the US dollar does typically weaken the year of a presidential election, but then the couple of months before the election, which is November time, we tend to see quite a strong US dollar, and then the after effects of an election is usually followed by again a strong US dollar. So maybe that gives us a little insight here in terms of the fact that through June and July we may see sort of that dollar CAD range, or at least dollar CAD continue to move lower. But then when we hit that sort of August, September, October and November period, we could see that strength coming back in the dollar CAD price, and dollar CAD could continue to drive higher. So that's something to take note of as well. Creating a trader's analysis. Let me know if you use COT reports. I find it really interesting. I'm gonna discuss what the commitment of trader reports sort of are, just briefly, and show you how I use them. But yeah, let me know in the chat. Do you guys use COT reports in your analysis? I think it's something that definitely could be used. And like I said at the start of the webinar, The commitment of traders, they show us where the commercials are. So the commercials are in the market for business purposes. Okay, so they are looking to hedge their positions within the market. So let's say it's a company in Canada and they're selling a lot to the US. They would look to hedge the CAD or the dollar in order to not be affected by the fluctuation of prices. Okay, so they will look to currency hedge essentially. You then have the large speculators. So large speculators, they are sort of your trend followers, I would say. Those are large institutions trading the capital. They're large investors, traders, things like that. So they will often follow price movements, whereas the commercials go against the price movement essentially. So a good way to always think about it, I always reference gold in this because I just think it's easier to understand with gold personally. And, you know, if gold prices are moving higher, the businesses that are involved with gold want to sell more gold. So you'll see the selling pressure on the commercials. They'll be shorting a lot of contracts because the price of gold is higher. So they want to make more profit from that. As the price of gold falls, they're going to be investing into gold, okay, for future price movements. Okay, so that's the way I like to think about it. And yeah, Tabo uses as a confluence. Yeah, it's a really good confluence. Obviously, as well, it's over a week period of time. Okay, so the commitment of trader reports are more long term, but they give you a sense of what's potentially happening within the industry. You know, let's say at the moment, let's say crude oil falls through the floor. And we see a lot of commercial buying around that, then we may see sort of hedges across currencies. So you might see some shorting of CAD essentially within the market. So let's take a little look at this then. What is this telling us about what's going on right now? So this is a weekly chart of dollar CAD above. And what I find quite interesting is where the commercials are positioned in the market at the moment. Okay, so their contracts are very, very high at the minute. Okay, so this is actually quite confusing, this chart. I will say this now. This is a price chart of dollar CAD, but the commitment of traders is based off of futures data. So this is actually CAD futures. Okay, down here, just to let you know. Okay, now a lot of the times they price it on dollar CAD charts. But essentially, if I'm talking about going long on CAD, you're looking at dollar CAD downside. Okay, so I can see that the commercials here, for instance, are buying a lot of CAD, and they are doing it at extreme levels, I would say, or recently there were extreme levels. So if I look left here, and I'm just going to draw a line across, we can see that they've been buying at extremes that haven't been seen for a while. So this chart spans from 2023 January till now. Okay, so at least over a year, we haven't seen short contracts as long contracts as high as they have been. We've seen a little bit of a dip from that, which is followed by a little bit of that dip in price, because obviously prices come away. They're obviously starting to offload some of those contracts, either reducing their long positions or increasing their short positions. But you can see we're actually starting to see a little bit of a curve back up in the commercial longs. So does that mean that we're actually going to see a little bit of a continuation in the dollar CAD price to the downside? Now, to reflect that, a little bit easier to follow, large speculators is the orange line. They follow price, and you can see here that we are moving lower. If I look left as well, they are shorting at levels we haven't seen for a while, looking left. So that tells me that maybe there is still a little bit more downside to come in the dollar CAD price. Okay, so we'll just have a little bit of a recap. I'll just put a little note up here, a little bit of a recap. If we consider sort of the economic indicators so far, along with sort of our sentiment indicators, which are the likes of the seasonals and commitment of trader reports and things like that, I would say that on the economic side of things, you could argue that there is some growth in CAD. Okay, Strong employment figures. We've got an inflation rate that is above 2%, which came in at 2.6%. Okay. So that could be strong CAD. Okay. Sentiment as well. So if we look at the correlation between oil and dollar CAD, okay, Brent crude oil moving lower usually drags dollar CAD with it. So that's also more on the CAD strength side of things. Then we've also got the commitment of trader reports, okay, COP reports, also showing a lot of commercial buying, okay. And remember, this is a dollar CAD price, so that to me would mean dollar CAD, a little bit of downside. So at the moment, for me, everything is kind of pointing more for dollar CAD shorts right now, okay. And it will make sense when we look at the volume profile, okay. So for me, the market moves between volume areas, okay. And what I mean by that is we have an area where the market will consolidate for a period of time, okay. And within that consolidation, we have buyers and sellers, right? We have buyers and sellers all the time within the market. That's how the market fluctuates. There are an imbalance of buyers and sellers, or fair value of buyers and sellers. So what I find is when we have a consolidation like this, which would be highlighted down here with the price between that 136 handle down to sort of 134s, the market is finding fair value here. Okay, we can say that it's balanced, okay, where the bell curve of the volume profile is the highest. And that's because you can see price bouncing between these two areas, okay. It's not always specific to those points, but you can see that we've been fairly range bound between those areas. And that, I would say, is fair value, okay. What we then have is an imbalance. So that is where either sellers give up their positions, buyers take over, or we have like a flood of buyers to one side. And that's what we had when price breached that 136 handle. Again, coincided with that rally that we saw in crude oil. But now we've kind of floated our way back down towards the 136 handle. Now, what I like to look for is for price to go and test volume. So if it breaches out of volume, I like the idea of markets coming back to those volume areas, because that's where volume has been created in the past. So I want to understand whether buyers or sellers are going to defend their positions, for one, or are we going to see them kind of give up that position and we're going to see a movement through that. So everything so far, I would say, for me, would be a point to a potential move to the downside, okay? And what I mean by that is, if we get accepted back within this volume area here, below 136, I think that we'll probably see the other side of value. So anything between sort of 134.50 and below would make sense for me, okay? Because that is where we've got that sort of value area low. It's the edge of the volume, okay? Essentially, you've got these kind of shells where the low volume are. That creates this area here. And if we breach back within value, auction market theory suggests that you go to the other side of value. So that's what I'm looking for here on dollar CAD at the moment. I'm looking to see if we breach 136, hold below 136, could we then come down towards that 134.50 handle? Okay, and I might go check out a chart in a second of crude oil as well, a live chart, so we can have a look at how crude is performing at the moment. But essentially, we've got lower highs, lower lows in the market. Now 136 is a crucial level. It's a big level in price. You can see that it acted as resistance for a very long time, so pretty much since December of 2023. That 136 handle was the place to be. I mean, even if we look left, prior to that, you know, we've got August and September of 2023 as well being used as support and resistance. It was almost like, again, that sort of magnet for price, because price has been using that for buying and selling. Okay, so we've now recently come back into it, and I feel that if we can't hold 136, then a breach lower makes a lot of sense. Okay, that's just in my opinion. What do you guys think, though? Let me know in the chat. Do you think dollar CAD's going to move a little bit lower, or you're looking more for that upside movement? Now, to trade it, obviously, you can do both. You can look at sort of your long and your short positions. So longs above 136 makes sense, because is that a rejection of higher volume? Okay. And are we going to see that sort of move? I don't necessarily think we will, unless, like I said before, unless crude makes the move. Don't think dollar CAD's going to make the move either. So if we were to kind of hold above this 136, I would be interested to see if crude eventually does start to print higher highs and higher lows. And if it does, will that be a point of then dollar CAD moving higher? But I don't quite see that at the moment. Obviously, I might be wrong. But I just, with all the information that we've had here today, I don't really see that happening right this moment in time. But guys, let me know what you think. Do you think dollar CAD's going to breach 136, or do you think it's going to continue higher? Let me know. I'm just going to bring up a chart. Just have some alerts from earlier. And this is dollar CAD right now. Okay. So I'll have a little look at it on an interactive chart. And we'll have a little look at crude oil prices in a second. Okay. Let me just full screen this. So this is actually a 30-minute time frame. If I go back to that daily time frame, this was the bigger picture that we were looking at on the screen just then. Okay, we were looking at this area of 136, and we were looking at if price was going to find support there, where could it go to? And this is where I talk about those pockets of volume all the time. The market will trade between those different areas of volume. So what I did was I went down to a 30-minute time frame, opened it up, and had a little look at where sort of near-term volume was. So what I did was I did a volume profile from the swing high that formed on Wednesday, the 8th of May, down to these recent lows that formed on Thursday, the 16th of May. And basically what it shows me is where those higher volume levels are. Okay. Now, like I said, volume is built up by consolidation. So you don't need a volume profile chart, because you can see there was a period of consolidation through here that has created the higher volume. There's a period of consolidation up here. There's a pocket of volume in there. The in-between parts where prices move very quickly is what we know as low volume, and the market can come and fill these areas. Okay. So I think if we stay to the long side of 136, okay, and if we can stay above 136.80, then we'll have to review where dollar CAD could potentially go, with a potential move up towards that 137.20. But what we can see so far is we had the data from CPI. Okay, so obviously CPI came in a little bit lower. The market sold CAD. Okay, and it came up into that pocket of volume here where sellers push back quite quickly. So the way I would be looking at this right now is this an opportunity to be a seller of dollar CAD essentially? And what we can do is go take a look at that crude oil price. So if I go down to my commodities here, I'm going to go down here. Okay, and what we're going to look at is the prices here of oil. So if I was just to do a comparison chart again, just so you can see it here, I'm just going to actually delete some of these tools and then we'll bring them back. But I'm just going to go to compare, and I'm going to bring on that US dollar CAD price. Okay, I'm going to hit that. And then what we're going to do is right click, pin that to the left side, and then I'm going to just drag the white line on. Okay, so the white line is oil, the orange line is dollar CAD. Okay, and you can see again the correlations between them. Okay, it's exactly the same chart as what I showed you earlier. It's just in a different format. But you can see obviously oil prices peaked, we started to move lower, dollar CAD prices followed that. Look at what we're seeing here on oil at the moment. It doesn't look very bullish to me right now. We look like we're consolidating in a downward phase, and the market's going to go and seek potentially lower prices. So really speaking, if we saw a breakout to the downside of this consolidation that's been forming on crude, is dollar CAD price going to get pushed with it? Okay, that's what I'm going to be looking for here. And if I just bring on the candlestick chart, you can see it looks very bearish. We have actually tried to see some buying coming in here and here, but it doesn't look like we've had any closes above those daily highs right now, which suggests to me that there's going to be maybe a little bit more downside. And again, if you think about it in terms of volume, right, the market was pushing higher, making higher highs. I'm just going to delete the dollar CAD off here for now. 1 second. Just remove that. Just make sure that goes back to regular. We were pushing higher. We were making those nice higher highs, higher lows. You know, I covered this in various live streams that if we traded below $80, I feel like we're probably going to see continuation. And look at the consolidation areas. That's volume there. Okay. We obviously had volume down here previously. The market came back to it, retested it, moved away from it. We're not seeing the same situation now. In fact, price is kind of staying within that pocket of volume there. So I think if we breach this and we start to move lower, maybe towards 72s, maybe even down towards sort of 70s and 68s, then there could be an idea that dollar CAD's going to follow that as well.